Good afternoon and welcome to the Blue Line Metals Edge here for Wednesday, September 7th. I'm Phillip Streible, Chief Market Strategist at Blue Line Futures. You're watching us on YouTube, be sure to like and subscribe to our videos. If you need additional information, go to bluelinefutures.com or send an email to info@bluelinefutures.com. A lot of action in the markets here today, a lot of volatility, specifically in the energy markets. A couple things that came out here. One, China's got these lockdowns going. They're on 65 million of their citizens. They're discouraging domestic travel. They're also discouraging that ahead of the holidays. That's impacting that crude oil demand there and also the energy demand. This is going on across 33 different cities right now, and there's been outbreaks reported in 103 cities. If you look at the chart here on COVID cases, fairly flat through June into July. August, you start to get that breakout. That's when they initiate the first lockdowns here. And then since then, it's not really backing off. So they've got a COVID case count going on. I think that they are blowing it out of proportion. But, because of that and the lockdowns that they have, you're seeing energy prices get very volatile here. Additionally, you've got Russia coming back in, and they're saying they want to renegotiate or revamp the Ukrainian grain export program. So that, along with them already weaponizing natural gas, you're seeing quite a bit of volatility here. So here's your wheat chart. We can go to a daily one real quick, and you could see that breaking out to the upside right here. It's up 40 cents, was up about 50 cents earlier. Corn up 2.5, did break out to the upside, pulling back just a touch. We're going to want to keep an eye on these markets because these could be some new trending markets to the upside. You look at crude oil, down $3.20. It really broke through that kind of support level. We're watching it. It might trigger a short on the trend following system. So we're going to want to keep an eye on that. If that does happen, we don't get that pushback up to like 85 to 88. We're going to want to lift some of those positions off here, at least lighten up for a bit until we can get a renewed bull move up. Now, I think that a lot of the problem stems, and you go to about a 5-minute chart right around 7:30. This got really squirrely here in natural gas. 775 was the low. We shot up to about 830, and I was watching it skip around on my screen, and I was thinking, what is going on here? This is crazy. Those are $5,000 moves per contract. So you could see that somebody was being squeezed to the downside and the upside. Since then, we've been fairly stagnant in that market. Now, I think some of the big turnarounds here and some of the other things that are going on, you do have the dollar index, which has come off. And with the dollar index coming off, you're starting to see some of those metals markets push back up. So getting into it here with gold up $9, looking pretty good. This is the run up that we've seen most of the day. We'll go to the daily chart real quick. The system here, they're going to start trailing a stop, and you'll see the stops come down on that gold market pretty aggressively. Same thing on silver, same thing on platinum, same thing on the copper market. Silver up 28 cents right now, starting to try and turn its way higher and getting into, the probable ranges that we're giving you here, the reversal buy points. You can use some of these if you want to try and buy the dip, sell the rip. That's what these are designed for. Here's that chart pattern and that double bottom holding on the gold market. Some of the key takeaways here. Again, dollar marched on new 20-year highs. We saw the gold-silver ratio at 95 for the third time since 1980, and that's why we think that silver on a call spread front going out to December is definitely a worthwhile investment here. So you can see silver trying to work its way back. It's got to chew through that overhead resistance, and then getting down. Here's the write-up on the call spread, and then here's that chart. That's the monthly chart. Gold-silver ratio, 1988, we got up over 95. We got this in about 2018, and then we got this again right here. So that's where we're at the moment. We're at about 95 on the gold-silver ratio. We really like the call spreads to the upside on silver. We think that it's a calculated risk play, gives you a lot of time on the market, favorable risk to reward, and it's calculated risk. You don't have to worry about it. We're going to have some volatility here because you can see coming out of third quarter, going into fourth quarter, we go into deflation. That's where you got your most volatility within asset classes, and then we're going to juggle around between this kind of Goldilocks scenario and then back into deflation. So a lot of volatility expected. The NASDAQ, it did trigger a short position in the market. Volatility, again, is going to pick up quite a bit. You're going to want to trail a stop there. We give you suggested risk management on all this. So for you, those of you guys that are self-directed trading, you could see where this is all at. Fed watch tool hasn't changed much. Still about that 70-30. 2s and 10s still just slightly negative. Here's the dollar index that reversed off of those highs, and then getting into crude oil. Broke through that support level. So we do have some concern on there. We come back up to it. We're probably going to lighten up some of those positions, take some of those off. If some of you are on the sidelines, you want to get exposure to crude oil, these are some optimal levels here. Again, we do have the Fed. We've got a ton of speakers coming out, and they're going to be speaking for the next few days. Even Chairman Powell, he's going to speak, and the last time he did that, as long as he doesn't get those Q&As, he'll be extremely hawkish. If he gets the Q&A, he'll probably backpedal on some of his commentary. Could be perceived as dovish. So you want to watch out. You want to prepare for that. Otherwise, in the evening, I'm going to start sending out what the probable overnight ranges are, and then I'll give you some of the notes that I took down throughout the day. If you don't have a notebook, you should just be writing down, jotting down some of these things, some of these observations you're taking here. Focus on the numbers. Focus on what's happening here. Quantify everything. So if you have any questions, futures option trading, give me a call at 312-858-7303. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck. Good trading.